Well, hey, everybody. Happy April 2023. That means now that we're back in April again, it is property tax protest season. But I'm not the expert, but I brought somebody on who knows just a little bit more than I do. This is Chase McRoberts. Hey, Chase.
How are you? Good to see everybody.
So Chase and I work together. He is a team leader here in our Keller Williams Southwest Market Center. But not only that, he's a partner in a company called Home Tax Shield, which is what many Texas homeowners could use as a third-party company to not only protest your taxes, but help you save money on paying those property taxes every year. Chase, little trivia question. What do you think the #1 phone call is I get every April from all my clients?
A tax question and call. Yeah. How do I lower my bill, right?
Yeah, I mean, basically everybody gets the assessment. In fact, start looking right now. If you are watching this video in late April or early May, check your mailbox because you should be getting your property tax appraised value, the estimated value now. You can also go online if you want to check your county to look for that. But essentially, that's going to let you know what the county thinks your market value should be, and you have some options after that. Before we get into our interview, just a couple quick disclosures. #1, this is for informational purposes only. So Chase and I, we're not lawyers, we're not CPAs, but we know a lot about the subject when we deal with real estate every day. So just know this is for informational purposes. And of course, in full disclosure, I am a client of Home Tax Shield. I've used them the past 2 years and protested probably 8 or 9 properties using that service. And I'll talk a little bit about how that's worked for me, the types of savings that I've seen. And of course, we'll talk about other ways if you choose that you can protest your taxes. So Chase, a little bit of, I want to share a little bit of information first about kind of how this works. I think some people are confused on how this works. Maybe you own property in Texas, but you're from another state that may have a different way to do it, or you just simply bought your first property and you're not sure how this works. So let's talk about 2 quick things. #1, we are a non-disclosure state. So what does that mean? Well, that means if I help Chase go buy a house and we close for $400,000, yeah, that might be in the MLS. That's a private network, but there's no public record. There's no website you can go to that shares that data with the state. So it's not public information. And that's assuming you bought it on the market. You just went to your neighbor and you bought a house and maybe the title company knows, but no one else knows that information. So because of that, the state still has a mandate with all the counties that says, hey, y'all got to go figure out what these properties are worth. And so every year, January 1, they are mandated to go figure out your market value. Sometime between then and March, they're going to figure out a number and they're going to send you a letter in the mail, usually in April. Maybe it comes early May, and it's going to share with you what they think is your estimated market value. Let's say this year it would be 2023. You're going to have a deadline as a homeowner if you want to protest that value of May 15th. Is that right, Chase, this year?
That is right. It can vary based off of holidays and weekends and things like that, but that is the date.
May 15th, circle it on your calendar. So you have a couple of options. You can protest yourself. On the back of the appraised value they're going to send you, it literally has a form. You can fill it out, mail that in to file that you're going to want to protest your taxes. You can go online to the county assessor's website, do the same thing, fill out the form and let them know you want to protest your value. Or you can do what I do. You can choose any number of third-party companies. I worked with Chase's group, Home Tax Shield. I fill out my information on their website and they do it. They're going to make sure they file for you by May 15th. Once May 15th comes, well, then it goes into the protest season, which is over the summer. So you're generally going to have an informal appointment with someone in the appraisal district to go over that. If they can save you money, that's great. If you don't like the return you get there, then it goes to a formal appraisal board. Am I right? So it's going to go to them. You get now it's like going to court. You're going to have to go stand in front of somebody, bring your evidence, try to lower your value. Once all that's done, they're going to lock in your estimated value early in the fall. Now, this is where people get confused. That's only one part of the tax equation. The other part is what tax rate are they going to use to multiply against that assessed value? Well, you get to wait for that one because now you've got to have the school districts, the city councils, the fire departments, all the municipalities that tax you or need your tax dollars. They got to put a budget together for the next year. Once they get all that done, they come up with the tax rate let's say in Austin, for example, in 2023, it was 1.97%. So let's say your appraised value is 400 grand. They'll use that times 1.97% to come up with the tax bill. You'll get the bill at the end of the year, usually late November, and then you have December and January to pay it. So number one mistake most people make is they wait until when, Chase, to find out if their tax bill went up.
Yep, they wait till the end of the year, and yeah,
they get the
and
bill
it's
and
too
they're
late.
like, oh man, I didn't know I owed this much tax. Hey, Ryan, can I protest my taxes? And I'm like, this year, no. Next year, yes. So I always say, you can always protest. You might just have to wait a year. The second time is generally if you have an escrowed mortgage. This is probably the number one mistake I see clients make is you get the mortgage and the mortgage company is the one collecting taxes and insurance from you. And what happens is you don't pay attention. You don't look for your appraised value. You don't even see the tax bill because the mortgage company gets it. They pay it. Of course, it went way up. And then they'll adjust your escrow account maybe in February the next year. And then all of a sudden you're like, whoa, my mortgage just went up because they told me my tax bill went up. Hey, can I protest my taxes? And so generally it's too late. So this is my blinking red to you who's watching this video. The time is now. So you've got between now and May 15th, look in your mail, go online, check it out. So, all right, Chase, number one, this is something I've noticed and I've been getting calls this year. You know, you and I know the Austin market has cooled off. You know, interest rates went up in 2022. We peaked on values last year. And of course, we all saw a massive spike in property taxes in 2022.
Sure.
I would have thought, hey, the market's slowing down. We should be seeing these property tax values come down. I'm pretty surprised a lot of them have not.
Well, what's interesting is specifically if you have a homestead on your property and you have some level of cap on the amount they're taxing you, they probably haven't reached the top of where they can tax you. And so you're going to continue to see these incremental increases. And what's really important, Ryan, is people often confuse the value that you're being taxed on and the actual value that's being appraised on the property. And those are two different things. And if you don't protest the value that your home is appraised at, you can guarantee that if you have exemptions like a homestead that can only do 10% a year, you can guarantee yourself essentially you're going to take incremental steps every year to get to that number. So you have two things that you can essentially protest. It's the taxable amount you're paying and the overall appraised value of the property.
You know, and I think what's tricky too is, you know, let's say we have a client. I have a client that just bought a house. And so they got an appraised value that's about $175,000 over what we just bought that house for. And so of course they're like, well, which one do I pay? Like, well, remember, we're a non-disclosure state. So it's not going to automatically adjust down to what they paid for that house. Why? Because the state doesn't know what you paid for it. And so there's a good example of a client that's like, hey, now's the time to start, because if you don't start now, they're going to set you at that number and they can continue to build off that number. I try to tell people it has like a compounding effect. Can you explain that a little bit?
Yeah, it does. You really have to protest every year to get really solid results. This isn't a one and done. You will potentially see a level of outcome the first year that you protest. But we have some different metrics that we've actually done some case studies on to figure out exactly what this looks like. We think that if you protest 1 year, you're going to get somewhere between about $2,400 potentially off. Well, actually, let me take a step back. Anywhere between zero, because it could be zero if you don't, and some level of reduction. If you do this about 3 years, it's about $2,400. I got the number wrong. And then 5 years, we think it can be about $7,500, somewhere in that range. Here's the thing though, and this is not everybody's outcome. And I want to make sure that everybody knows that home tax shield is not about getting you the lowest valuation. It is about getting you a fair valuation.
Right.
And when you were talking about, Ryan, potentially somebody purchased a home and they paid less than what it's valued at on the tax records, I would just caution homeowners, be very cautious about taking that closing disclosure in and showing that to them. That is disclosing what you paid for something in a non-disclosure state. And many people are, will reach out to the respective agent and say, I need sales data. I need to know what was going on in my neighborhood. you're immediately taking that to the entity that has lost some battles before about having access to that data when they shouldn't. And you just want to be very conscientious about fighting the right fights. And there's a couple of legal fights in Texas as it relates to taxes. So, and we can dig into that too in just a second.
Yeah, and I heard this from you before. So one thing that also confuses people is, let's say you bought your house 5 years ago. Okay, well, are you selling it this year? No. So what's it worth? Right? And so, yeah, there's on-market data, but that's only a really small fraction of the number of actual homes in the market. And so, yeah, you're sharing some sales comps, but really, if you're not trading that property, it still has a market value. And so there's some other ways that you guys can look for value, look for equity in properties that doesn't have to do with sales. Is that right?
That's correct. And that's really about the equity argument. And it's not equity as what you think of my home is worth 700,000 and I only owe 300,000. My equity's 400,000. That's not what I'm talking about here. This is about equitable properties to each other. And so, yes, you think about a neighborhood of 100 homes, maybe 20 of them sold this last year. And so what those 20 homes have sold for and what they were priced at and what the consumer paid for it. So where they traded in the market. But what about the other 80? What are those homes on the books for? And actually, this was on the news in Austin last week about, they were talking about it. They're talking about the legislative level, because what somebody is paying in taxes across the street can be entirely different. And when I say entirely different, I'm not talking $1,000. We're talking it could be $1,000 a month in certain areas of town. And so what the person across the street may be paying is entirely different. Now, is that home equitable to yours? That's what is up for debate. It may and it may not be. And so what Home Tax Shield is focused on is, you have a 3-bedroom, 2-bath house, Ryan, and it's 1,500 square feet and you're on a 0.3 acre lot. What other houses look like that and are in that range, and what are their valuations? And so this is all done through technology. And can the average homeowner do it? Yes. Is the data available to them? Yes. So there are ways to do this. And more than anything, I have a passion for educating and making sure that we all understand what this looks like. I did this for years on my own. Sure, you've done it on your own before, Ryan.
Never.
You never have? Well, then
that's why I like Home Tax Shield.
Then lucky you.
Companies. Yeah. I don't ever want to do it myself.
It's tough and you spend a lot of time. And so when you really get down to it, it's kind of like, what do you want, time or money? And it's all about leverage here and having an expert go in. So we can talk more about that too, but it's I love the equity argument. It's really a great one to use.
So I'm a licensed realtor. We have a lot of continuing education classes. This is one of them. I don't know. Well, it's going to blur it out, of course. But what it says is how to fight your Texas property, tax appraisal and win. It was a 2-day course. It's got notes and all. And after taking that class, I immediately said, that's the last thing I want to do. So personally, I don't want to, your time is money. This is kind of the argument. So you're going to take some time. You may end up spending a couple hours having to pull your argument together. You're going to have to drive down to an appointment, spend time at that appointment. At the end of the day, I'm not the expert. I don't know. I know what you said. I know some sales data. I might know I'm upset if I think it's too high, but sometimes I don't really have enough to know exactly how to do it. The simple answer is you're not just looking at sales data. You're looking at everyone else's appraised value to make sure that everybody is staying in line with each other. And that's right. We're not trying to rip off the public. You're going to pay what you need to pay in terms of tax. The goal is not to overpay and, more importantly, end up in a negative compounding situation where you overpay this year and then they're going to assess it on top of that next year and the next year. So without fighting the value every year and keeping it in control, you're going to end up kind of scaling much higher than those who do this process every year. I think another thing that confuses people is it's really not expensive. What does it cost? You're not hiring an attorney. This is not thousands of dollars of cost. Generally, and we'll talk about Home Tax Shield. Other companies are similar. They may have some different fees, but generally you're going to pay a very nominal fee up front. I think I pay $15 a property one time a year, and that's just to get the property, on with that company. And then if they save you money, if they reduce your appraised value, you'll pay a percentage of those savings to that company. If they save you nothing because it was already a fair value, you don't actually pay any extra money. Is that right?
Yeah, that is right with the home tax shield. And the thing that there's two things that I'll say about the pricing structure. The first year that you sign up, and if you sign up through Ryan's link, and I'm sure you're going to post that here as well, the first year you sign up, it is $15. The recurring years, it is going to be $30. So Ryan is giving you a 50% discount off of that first year sign up. The success fee is 30%. What Home Tax Shield does is we do take into account exemptions, which is a unique feature about what we do. And so if you have a $500,000 house and it gets reduced to $475,000, and I'm making up numbers here, and so that's a $25,000 reduction in value. With that being said, and you have a homestead on that, your homestead's actually worth $40,000. Therefore, we would look at that as being reduced to $460,000, right? So meaning from the taxation standpoint. So we actually did not save you any taxable fees or you don't have any, your bill is going to be zero essentially in regard to the increase. With that being said, we are not going to charge you anything beyond that $15 or $30 depending on what year you're in. So that is a unique value feature that we provide at Home Tax Shield.
That's right. And other companies may have different fees. Some may not charge you at all up front, but they'll have a higher percentage that they're going to take off the savings. So, you know, that's a great way to evaluate. You know, I'll share some other companies that are out there. There's Texas Pro Tax, who I've used before. There's Five Stone Tax Advisors, and there are a number of law firms. You can Google them and just say, hey, property, you know, tax appraisal companies, and you'll find other firms in town. So if y'all want to evaluate, that's an easy way to do it. Like Chase said, I've got a link to a landing page that I'll share with everybody. Check that one out as well. That's an easy way to sign up. What I like about it is, honestly, it's going to take you 1 minute, maybe, to sign up. Some companies are also going to ask you, they really want you to upload lots of stuff or send in the sales data and all these things. Home Tax Shield's basically like, hey, we don't need anything. If you want to send us a document or two, you can, but it's not required. And so it does make it very easy, I think, for consumers to do it. And then you're done. The goal is the timing. I would say, what is the appropriate time that you want consumers to sign up?
You know, what's incredible is about 90% of the people that sign up with us every year do it in the last 2 weeks. So we are in crunch time right now.
Which they will, by the way, if they're watching this video, they'll probably be within that last couple of weeks.
Because people contact you, you know, and then you're contacting me. We're getting together and doing these videos, which is amazing. And we want to help everybody that we can, and we will. So the appropriate time to sign up is absolutely today. You don't need to wait. Signing up now versus signing up in 2 weeks, it doesn't do anything for you, and there's nothing against you, right? And if you wait 2 weeks either, we will do the same process that we will do, and regardless, it just helps us to make sure that it's all done. You certainly don't want to try to contact us on the 18th of May, wanting us to try to file a protest for you, because we can't. We just can't. So we're all across Texas. We work in over 39 counties across the state, any major area. So Ryan, if you have clients that even primarily in Austin, they have investment properties in other areas, or their family members' properties in other areas, we can help all across the state, even El Paso and the Valley and Lubbock and Dallas and Houston and San Antonio, all of those, Corpus, all of those areas around, we're available. The other thing I did want to mention, and you kind of hit on this a little bit, but I want to just expand for everybody. If you are to fight your property taxes on your own, you can. And if that's all that you're going to do, you should do it. At least do something, I think, is the point. 86% of Texans don't fight their taxes. It's that high. It's pretty amazing. And here's the thing, is the system truly is a little tough for an average consumer to go in and fight your taxes. And again, I know I am part of Home Tax Shield, and I don't want to sound too biased here, but I just want to tell you, because I've done it many times, it's a process. And the thing is that we go in there with our data sheets and everything that we've prepared, and they're ready to really talk because we do have numbers. And so with that being said, the success, at least that I've even seen in trying to compare what it would look like from a consumer standpoint versus us going in, I think it is more favorable as I think back on what I've been able to achieve on my own. But you'll have to make that judgment, and it's all, every property is a little bit different. And so there's no, one size fits all here. And if you sign up multiple houses, Ryan, some we may win on and some we may not. And that's just a matter of either depending on the county and who we're getting in front of, and also depending on the property and what available data is out there about the specific criteria around that property. So anyway, just something that I think that everybody should be aware of is that they can in fact do this on their own if you choose.
And they let you, like,
Oh, yeah.
on their form, when they send you the assessed value, the estimated value, on the back, just flip it over and it says, hey, do you want to protest? Fill it out, send it back to us. So they know they're setting it up for us to do that. I would say too, you had mentioned what counties you're in. So if you go to the link that I send you, there's actually a little map. So if you're curious if they cover your county or not, if you're not in the Austin metro, maybe you're somewhere else in Texas, just look at that map. You can see if they serve that county right now. So that helps out. I wanted to mention one more thing. So there is a difference between an owner-occupied property and a non-owner occupied property. I own both. So a rental property would be non-owner occupied. So in the state of Texas, most of the property tax, what's the word I'm looking for? The savings, right? So your homestead exemption, that's the word I was looking for. So your homestead exemption, maybe you're disabled, maybe you're a veteran, maybe you're over 65. So these are layers of exemptions that the state allows you to save money off your property tax assessment. Where it really comes in valuable is if you are able to lower that value by protesting your taxes, all those same exemptions are still there the next year. So if you, let's say, like you mentioned, instead of being assessed at 500, you move it down to 475 or 450. Well, next year, they still have the same cap to be able to bump you up no more than 10%. Is it 10% on a homestead exemption? Is that right?
That's right. Yep.
So if you save money, now you've capped how much more they could, like if you got down to 450 and they have a 10%, well, now next year they can only bump you up $45,000. That's 490. Now you're lower, 495. You're lower than that 500 had you not protested. And then it compounds every year. That's why I think it's so valuable to do this exercise every year. I do it on, we have, I think 6 or 7 properties right now. Last year we protested. We used Home Tax Shield. Like you said, some of them had very marginal differences because they were already pretty fair value. Some other ones, we got some pretty nice savings, but in aggregate, we lowered our assessed values over $300,000, which came out to, I think, almost $7,500 of real dollars.
Wow.
Tax savings. And so that's real money. I mean, imagine if you put that money back in your pocket, what you could do. Even if it's one property and you saved $500 over time, every year you're saving that money and it really starts to compound. So that's why I think it's important for both primary and non-owner occupied, because non-owner occupied, they can jack you. There's no limit. They can move you 30, 40% in 1 year if they think you're not fairly assessed. So you want to be battling both, I feel like, every year.
Yeah. And I mean, from an investor perspective, Ryan, I mean, it's really hard to manage those influxes, right, of expenses. And so to try to manage the expenses, this is one of the ways that you can really try to put a cap on it a little bit. And that's one of the things that has been very successful for us is going after that investor market, because in Texas, there's nothing capping those properties. And if you've moved here from a different state, like I use California as an example, the tax situation in California is so different. Not everybody understands when they move to Texas, for instance, that you even need to file a homestead exemption, or you need to file an over 65, or that you need to file some of these exemptions. And so I've heard some real horror stories where some people have been assessed and they owe $1,000, $2,000. I've heard up to $5,000 more a month on some of their taxes after moving here. And I think that's an extreme case. So I don't want to scare anybody here. I just want to make sure that you understand that filing the exemptions is really, really important. If you haven't done that, I'm sure if Ryan's represented you, I know you have, but if you haven't, you absolutely need to ensure.
That's for sure. I would check that number one, right? Is like, go you know, if everybody goes, well, where do I go? You know, well, you go to your county appraisal district. So Travis County Appraisal District, Williamson County Appraisal District. You go on there and it'll usually have a big button that says property search. Click that button, type in your address, or it may ask you for your last name, search the properties. You can look up anybody's property, by the way. It's public record. You can look up your neighbor. You can look up everybody. So go look up your properties, see if they have an exemption on there. One little caveat about Travis County, they kind of have gone rogue on filing those more than once a year. So if you closed on a property maybe this year, and it may not be there yet, but just know that it's there if you file it. And so go and make sure you file your exemptions. Number two, the deadline again for 2023 to file a protest is
May 15th.
May 15th. So everybody remember that, circle it on your calendar, which means don't wait till May 15th. Do it now. Go and file your protest, get it done. But more importantly, think of it as an annual exercise. You're going to do this every year, you know, file your protest. And then finally, if you have additional questions, if they want to reach out to you, Chase, what's a great way to get in touch with you?
Yeah, absolutely. So my Home Tax Shield email is chase@hometaxshield.com. Feel free to reach out to me there, and feel free to obviously check out Ryan's page on Home Tax Shield. And you can also chat on hometaxshield.com. If you have any questions for any of us, we are all there. I take chats. We all take chats. We have a small team. We're all in this together, but we're small and mighty. I would say that.
I would say too, one last thing, even if you think the market value is accurate, it's really not costing you that much to test it out, because the market is moving. We have this conversation every day. What's the market? How's the price? Where's things going? You know, prices are softening. And so even if you think your value is fair, or it's not any more than last year, it might be higher than where the market is and what your neighbors are trying to get their property tax assessments down. So I'm a big fan of just have a professional handle it for you. And that way, you know, without having to think about it, that you're at least at that fair value every year. So check out that site. I'll send a link to everybody that will have the link to Home Tax Shield. And of course, if you have any other questions about kind of this process and just real estate, maybe your market value, you're curious what you think the market value is for your property, we're happy to run that for you. Until then, Chase, I think you're going to be busy the next month with all these Home Tax Shield clients, and hopefully saving us a little more on our assessed values.
We will do all that we can for you guys. Thanks for having me, Ryan. I appreciate it.
Yeah, thank you, Chase. And everybody get busy, go protest your taxes, and we'll see you on the next one.